since 1949 back up to be a comparable power to the United States today. That power index is made up of 8 gauges of power that are shown in this next chart. They are the powers of education, innovation and technology, competitiveness in world markets, share of world trade, economic output, military, and the strength of the financial sector and the strength of the reserve currency. I'd like to draw your attention to the 2 that are lagging the other measures of power in China. They are the power of the reserve currency and the power of the financial markets and the financial sector. Both of them have not developed as nearly as much as the other aspects of the economy. These powers traditionally lag other countries' powers, but inevitably catch up. In studying history, I saw that all leading empires over the last 500 years had the world's reserve currencies and the world's financial centers. China is now the world's largest trading country, and it is evolving into that role. These charts show the United States and China share of world trade and world GDP and convey the evolution which has been taking place. Even though China's share of world trade and world GDP are comparable to the United States's, the renminbi is only a small fraction of global reserves, world trade invoicing, and cross-border lending. In contrast, the U.S. dollar accounts for over 50% of global reserves and trade invoicing, and about 60% of global world lending. I expect that to change. Similarly, China's financial markets are opening up to foreigners. Roughly 60% of all domestic Chinese assets are now accessible to foreign and outside investment, which is up from just 1% in 2015. These markets have also gotten bigger and more liquid. For example, China is now roughly 15% of world's equity market capitalization. This, in addition to new rules allowing outsiders to manage money in China, has enabled foreigners, such as my company Bridgewater, to set up investment funds in China. We brought foreign investors into Chinese markets. I believe it is a very special moment because simultaneously there is the rapid development of the Chinese capital markets, the opening up of these markets to foreign investors, the relative attractiveness of them, and the underweightedness of global investors in them. And there's a talent and an intelligence in China that will mean that Chinese investors will end up being great investors, particularly as they learn more. And this is happening when the fundamentals of the U.S. and U.S. dollar are becoming more challenging, making it a relatively competitive place to move one's capital. So I believe that these changes will broadly benefit both Chinese investors and foreign investors.